The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin. Glad you could join us today right here at TFNN. Also, don't forget you can always listen to us anywhere in the world on your phone at tfnn.mobi. And if you have any questions, go ahead and feel free to give me a call right now. You can reach me at 1-877-927-6648. Would love to hear from you any questions you got about stocks, options, futures, forex, binaries, and, of course, Nadex spreads. And let's check out where the market is. It is zooming right now. We got the S&P up 17 points. We got the NASDAQ up 36 with the Russell up 12. We have the Dow up 139 points with gold down 7.6 points on the day right now. Silver's down 2%, and copper is down over 1% on the day. Oil is down just a mere 20 cents on the day, with corn down 5.5 points, almost 1%. Soybeans going the opposite direction, up 11.5 points. And we got the euro dollar down 52 pips, the pound dollar down 33, the Aussie dollar down 14, with the euro yen down 47, the pound yen down 11, the U.S. yen up 3. The U.S. Canadian is currently flat on the day after the news that it had out earlier. And we have the U.S. franc up 83 pips on the day. So with that, let's go ahead and go into a few things. One thing we like to look at every day is what news came out, what markets were affected, and, what could be done off those, or, we'll go through the deviations and everything along with it. So pulling that on up right here on the chart for you. And this morning, we had just a whole slew of news. We had a little bit last night, nothing major, but you had the CV leading index. That wasn't anything you could do. China did come out with this HSBC flash manufacturing PMI. Came in worse than expected, and was almost the worst number they've had in the last 6 months. Just about tied by 0.1 with another number. And then looking on over, we got a level of diffusion index based on it's basically the survey. They survey the purchasing managers, and so people, obviously people who make purchases for companies, and they go out and they survey 430 companies, and they ask them to rate business conditions, prices, deliveries, inventories. So basically just everything about how they're operating their business, and with that, they're able to do that. We just got a major RSI divergence, by the way, and the markets are pulling back, and they are pulling back fast. So be very aware. But you definitely had a heads up on that one with the RSI. It was there. I'm moving down really quick right now, getting some solid, good movements. All right. So checking out a couple other things. That was the China manufacturing PMI, like I said, came in negative. And then today, we had a bunch of news come out. Let's go ahead and scroll on over. We'll look at the first item of the day. We'll go ahead and check out the euro dollar. So over here on euro dollar, we can see the moves that happened off the news. But man, yeah, we're just not watching some nice moves going on right now. So some good trades, fast trades. And let's see here. It's taking a minute for this chart to load up, longer than I would like. And if necessary, I'll flip it on over. But, yeah, see all this going on right now? Well, we have like 16, 17 points a minute ago. And so, yeah, just watch out. All right, so this right here, this is an opportune moment. This is why you trade Nadex, okay? Because you need to find risk, because you never know when the market is going to go berserk. Market was down 20 cents. Now it's down 66. That is 46 pips in a matter of seconds. Seconds, okay? That's $400 solid. And we're giving up the entire gains for the day right now as we speak. And the market is crashing. All right? So the market, it's going, and this is like oil last Monday. I mean, oh my gosh. I mean, it's just flying. And so anyways, forget everything else. Let's just hop on here and look at this. All right. So, we'll pull up, the S&P or whatever you want to pull up right now. But look at this. I mean, right there. And with volume, with commitment, pulling on down, hit the half deviation level right now, pulling back from that deviation level after the big move. And, yeah, I don't even have an idea right now. I'm trying to pull it up myself, figure out what is going on, because that just came out of nowhere. But I don't know, maybe we got flash crash too. We'll see. But yeah, that was a massive move down, and it flew on back up. And now it's knocking out everybody's stops who went short. They're out of the market, and now that their stops are hit, let's go ahead and get them all back and see what happens after that. I mean, that's how it goes. And so you want to short? You want to go short in this market now? What are you going to do? Are you scared? Should be. Okay. If you want to short in this market right now, the thing's moving fast. That's almost the morning in a matter of minutes, or less than a minute. Get 10 points on the S&P, 100 points on the Dow. I mean, that's just massive. So what are you going to do? Well, how are you going to do it with confidence? How are you going to do it without fear of getting, spiked out because the thing flies up 15 points from here? You can trade Nadex. You can trade the U.S. indices. You can trade whatever you want over there on the Nadex exchange. They have all the major indices. They have the currencies. They have the commodities. So all the things that you like trading, you can hop in there and take advantage of. And it'd be really scary otherwise to short. Yeah, I mean, that was down and back up. So, we had a little bit of a clue. But, my goodness. So now, right now, everybody that is back up, they're so thankful because they had all their mental stops going on, right? So all these people had all their mental stops going on, and now you got all these buyers and sellers, and they're like, oh, was it going to break out? Did they just hit the stops, and now the market's just going to take off and go to the moon? Or should I just get out of it? This is just way too volatile for me. So, I mean, there's a lot of mind games going on right now in every single trader's head. And so you need to have something. This is where you're going to flip over, and maybe you're going to look at binaries, you're going to look at spreads, and you're going to see, what is there out there that I can take advantage of? And so we can go over here, and I mean, if you wanted to go short the market, you could look at the binaries. I guarantee you they are inflated through the roof at the moment. And without even looking at them, they got to be after that kind of move. So let's see here. What do we got? So we just made a move down to, what, 1564. We're going to, yeah, I mean, $81. So if it goes back down there below 1564, you can put that trade on. Here's your risk, $17. Going up, down, up, down, up, down as this market's moving like crazy right now. So I'll throw that trade on there. We'll see if we get a pull on back. I would not be surprised to see a pull back after that kind of move. And there we go. So you put that order in. This is one way to go short. Okay? So you can do that. Now let me show you one other move. And I'm going to time it. I wait to see a confirmation before I hit the button. So I got to get ready. I got to have my chart ready. I got to have everything ready. And so watching the charts right now. And sometimes, you miss it because it goes insane. But we'll come back over here. We go to the box spread scanner. So that's binaries. And, yep. We'll go on over here to the spreads. Check out the US 500. And we can go in and we can choose whatever we want. So I can say, you know what, I don't want more than $100 risk. I may just cut it right down to risk, and I could go sell, buy side. I could do a straddle. I could say both. And do that over there. And then, I'm going to say, I don't want a massive break-even distance, so why don't we cap that break-even at, 10 ticks. Come down here. Let's cap it at 10 ticks on the other side. Or we could just do what I call at the market. So by doing that, and then we'll, so I'll reset. We'll start over. $100 risk at the market. Both directions. There we go. So see if there's anything that we like. And there may or may not be. If there's not, well, at least okay, there's not a spread I like at the moment on the S&P. That's at the market. Right now, the implied volatility has inflated them all so much that you have a massive break-even distance. Now, would you be willing to go outside that break-even distance? Maybe. You just got to be willing to give up the premium. Like, you may not make any money until it gets lower. So what would happen if we were willing to do that? We can see, are there any out of the monies that are really low risk right now? That's 4.5 points down. So that'd be 4 points. That'd be 1568. But if it keeps going down, I could make up to 80. Got till 3 o'clock on that trade. That's not a horrible trade. This one's 130 points down, which is 13 points, 130 ticks, because it ticks in dimes. So you can check that trade out. But yeah, the only reason it's so far down is because it's out of the money. The market's here, and here's the floor and the ceiling. So it's like buying an out of the money, put. And somebody fat fingered that one, right? Anyway, so we got these massive moves going on. You're trying to figure out what to do. Looking over here at this trade, it's up at $84 now. And you're literally just going, okay, is this thing going to fly down? Is it going to move up? I mean, what is it going to? And we're just watching, because after that kind of move, I mean, you can't just jump. You gotta see something if you're going to take a trade, or you're just like, you know what? Who cares? It's $155, and I can make $845 on the trade if it does fall back down to that level by the end of the day. So there's a lot of different, ways to do it, but I'm trying to look at this to see if I can see anything that actually is useful in the market news right now. And I have like live news feeds coming through. I'm not seeing anything. Okay. It was a flash crash based on fake explosions at rumors in the White House. So again, flash crash based on fake rumors in the White House. Wow. All right, let's see if I can get that link up for you. There we go. By the way, I found this, one of my buddy's sites, pretty cool little site. It's a news site, financialjuice.com. It's feeding in here constantly. And that report came up right there. And I'll put that over there in the den for you. So there we go. That's it. And that is what caused it. Okay, now we know. That was a rumor. It was a myth. It's over. And that's what made the market go down like that. Glad I didn't hit the button. Glad I waited for a little bit of confirmation. Okay, I was ready. I had my contract up, but I waited. False rumor went out and dispersed. Okay? But it doesn't matter if it was fake. They don't go back and erase the prices. Right? So, again, they don't go out, they don't erase the prices out there, and, you really need to have some sort of plan. What are you going to do in order to, keep up with this? So, how are you, what are you going to do? I mean, you're in this trade, you're long. Do you have any kind of protection on your trades? Do you have capped risk? Even if you're choosing at the market spreads on Nadex, at least the risk is capped. Okay? So if I go in there and I cap my risk off and go over here, I can't lose. Let's say if I'm doing 5 of them, I can't lose more than $200. That's a 4-point move against me. I can deal with that. Okay? So, but this thing just went 10 points against you. You got stopped out no matter who you are. So, think about that defined risk. I mean, that thing moves so fast, you could not have hit your stop loss. If you had a stop loss, you got a horrible fill. And now you're like, well, should I use stops if things like that happen? Well, it could have went down another 20 points. It could have taken them an hour to figure it out, okay? Or it could have actually been something real. So, anyways, that definitely excited the show up a little bit, right? But, wow, yeah. But, here's actually this actually came out of the AP. Look at this. Breaking 2 explosions in the White House. Obama is injured. And obviously that is a rumor. All right. Stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, welcome on back here to the Diagnostic Trading Hour. So I think it's safe to say we can close out that sell ticket at this point, right? So, yeah, because every sell order just got filled. Every buy order just got filled. So, buyers, sellers, ouch. And over the Tiger's Den, seeing a question, no do-overs by Oda. Yeah, I don't think there's do-overs. So, stop was there, boom, hit, done. Now, this brings up an opportunity to talk about the hedge strategy. Something I don't talk about a whole lot, but, I do go into it now and then. So let's talk about the hedge strategy. Let's say you're long the S&P, and you want to hedge off your position, okay? Then what we're going to do is basically look at the spreads right here on the spread scanner, okay? And notice how it says it takes 5 Nadex spreads to equal 1 S&P. So basically, because every spread for 1 point is $10, so you need 5 of them to equal $50, so it's like an S&P E-mini future. And if you want to do a trade, you got to look at, okay, what's my risk on the trade? And your risk is going to be the difference between where you buy, say if you're buying the S&P, and where you sell, all right, where you sell the spread. So if I buy the spread at 15.72 and I sell it at 72.9, I basically don't have risk on the trade. I just can't make it. I mean, I've walked in, I guess you could say a small profit, but it doesn't give me very much of a hedge. It's only going to make me like money down, like $25 down times 5, like $125. So there's only like a couple points of protection there. It's not going to do me a lot of good. So I want one with, a decent profit. So I'm going to go in here and bump up my risk-reward ratio, because if I'm going to do a hedge, I want one, like at least a 1-to-1, if not a 2-to-1. So we'll go down here. Now we got a little bit more protection on the trades. And we're going to add in a separate hedge scanner all by itself now. And, a new feature we just added in yesterday. Open and close of markets. Now shows right here live on the scanner. So you can know what markets are currently closed and what markets are open. And that should help you out as you're trading on Nadex. And so, anyway, so right here, you're looking at this. If you were buying, you were selling. So if you bought at 1570, find 1571. Try to find one with the lowest risk you can. That's as close as possible, with as much time as possible if you want the time. And so you'd probably be looking right here at this trade. It's going to give you a hedge of $250 times 5. So that's going to give you a hedge of $1,250. Basically, hedge all the way down to the floor, which in this case is $15.45. So if I went long the S&P and I sold 5 spreads, the spreads would make money on the way down while my S&P was losing money. So if it pulled down against me, say, let's just say 10 points in a minute, then I'm okay, because my spreads are making money while my futures losing money. Now, they are in 2 separate accounts. So you'll be trading the futures, say, at your futures broker, and you're going to be trading the spreads at Nadex. So you have to have the money for the drawdown in your futures account. All right? But your net between your balances in your accounts should not exceed, at least at expiration should not exceed, that risk on the trade, that difference. And again, the risk is not the risk of the spread. The risk is the difference between where you buy and where you sell. So if I bought this at 1571.5 and I sold at 1570.2, then we're talking a point of risk, 1571.5, 1570.4. So I could get in, I could buy the S&P, I could sell the spread, I have a 1-point risk on a full futures contract with 5 spreads. That's a $50 risk on the trade. And I won't lose more than $50 so long as I exit the trade if it goes all the way down to $15.45. Okay? So pretty simple. Now, when do I make money on the trade? Because that's how I cap my risk. So if the market flies against me, hey, I'm covered. Right? But how do I cap my risk? Well, or where do I actually start making money? Well, I need to I need to get past this ceiling here by the number of points. So that's where, this trade might not be the perfect one for you at the moment. But I'd basically have to get above the ceiling and make back this risk. So it's $50 right here. So you'd have to get several points above the ceiling of the spread so the future makes back the risk on the spread, even though your total risk is, again, only the difference between the two, because when one's making, one's losing. But if it goes up, and let's say the spread is losing money, well, the S&P is making money. And so it's going to have to get about 4 points or so above the spread. At that point, then everything above that is profit. No cap on profit. But also, you're talking a 1-point stop loss in the S&P. So, how easy is that? We just saw 10, 12, 13, I don't know. We saw a lot. All right, we'll be back right after this break. Stay tuned.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just checking a few other things out, but yeah, the market's looking. You're going to have to test that high vol bar, as Tommy just posted over there. So right there, 1574.25, fell on down, coming back, going to push up. You got a nice little scalp right there, 1574.25. So yeah, there's all different ways you can trade that. How far will it go? What will it do? But I mean, when it came down, I mean, it gave you a perfect target on the way back up if you had lightning fingers, because you know, while you're trying to figure out what's going on, you know, trying to actually make a decision in that moment is pretty difficult, and to say the least. But let's go over here. We could look at, you know, we got some binaries that are expiring here in 25 minutes. Is there anything that we see? And right now, 1573.6. So you do have one that's like $27. If it hits 15, for really, it moves up 1.6 points in the next half hour. Then you could make $70 on that trade. If it moves up, let's see here. If you got out at it, you could exit at 43. Basically, make $20 on the trade. But you're all time based, and there's a lot of implied volatility. That's why I'm so big into trading the spreads. I like the binaries. They're fun. They have their purpose. But I really like the spreads. And so anyways, but I just want to go through that, make sure you understand it, and you can see how different ways that you can use Nadex to help you on your trades. And I mean, it's not just the S&P 500. I mean, you could have been trading gold, because I mean, at least it happened before then, right? You could have been trading, crude oil and taking advantage of it. So you got crude oil spreads you can take advantage of. You could have been trading the euro dollar. And, right here, so you could went in there, very low risk, and you could straddle, strangle, whatever. You could buy the $1 right now. And it shows, trades you can put on, very low risk, expire at 3 o'clock. And but right now there is a lot of implied volatility in the market. So there's a lot of ways to take advantage of that implied volatility. And one of the ways that I like to do is I'll go in and I'll look at iron, what I call iron, basically they're iron butterflies on binaries. And so this will be a little new lesson for the day. We'll talk about this. So we could we'll just look at the 3 p.m. ones now. Those are coming up. So like pound yen. On this trade, what you could do, let's see, I don't like those. Let's see if we can find one I like. Not a big fan. Let's go to the dailies. There we go. Okay. So what you could do on this is you could say, hey, in the next hour and a half, we pound yen is going to stay between 150 and 120. And, we go up here, we'll say, I'd like to see it move up a little bit. But we could say this price right here, you may be able to find another strike. Let's see if we can combine strikes of expirations. So we have a 3 o'clock one, and I'll go back and I'll review this with you after I pull them up. And there we go. Okay, so, yeah, that gives us our trade. Okay, so on this trade right here, what you're saying on the pound yen, let me bring the chart up behind the screen here. And you can see where I had one on last night, expired out, worked out. So so we're saying that the market will stay between, if we did this trade, 151.69, okay, right there, and above 151.20. So will it stay in this range for the next hour and a half? Now that's not a whole lot of time, obviously, but that's basically what you'd be saying if you did this trade. And what would your risk be? And it can sort of be a little deceiving, but your risk actually would be right about $50. So there's about a $75 risk on both sides and about a $25 reward on both sides. So understanding that and how that works, you go, okay, so if only one side can lose, because it could be above it, it could be below it, it could be between it, but it can't be both above and below it, meaning both sides can't lose. Only one side could potentially lose on the trade. That being the case, I could then go in and buy them, and if it went below it, I've made $25 on the one side, I've lost 75 on the other, I've made 50. If it goes above it, I've made 25 on the up, on the one that I originally bought. The one that I sold, saying it would stay below 151.69, I lost $75 on that one. And also, that's if I hold it to expiration. I could also get out, like right when it hits the strike, like right at $50, and I could lose 25 to try to make 50. And all this is on premium collection. Now, this is only with an hour and a half left until expiration. I could roll this thing over, and I could look at the 7 p.m.s. And we could look at, how much wider can we get it? We could drop it down to 151, and we go up here to, 151.8. So now I could bring these lines right here, and then up to 151.8. And I could even push it back a little bit further. I could go, what else do I have? What if I want to go to 11 o'clock? Okay, usually a pretty quiet trading time there. And so I could sell the 151.8, so that's basically the same thing. So there's really no huge advantage there. And what if I go down a little bit lower? They're going to give me anything better. So 151. So I'm not getting any advantage on the 11s as I was on the 7s. So let me double check that again. Is that right? And yeah, look at that. The exact same thing. So same trade. So, no major advantage on either one of them. And that determines basically it has to expire in that range. So you could go in, if you're going to do that, and your goal is to have it expire, would you want the 7 or would you want the 11? Well, you want the 7 because it's going to expire sooner. It's not any wider. But they're charging the exact same price for 11 o'clock as they are for 7 o'clock. So, and same distance, everything. So, it's just sort of an interesting thing to look at when you start seeing how the binaries are structured and priced. And, we're actually working on building a binary scanner as well. We have all the live data feeding in now. We're starting to parse it all out. And there's a lot of contracts. There's like 2,700 contracts. So there's a lot of stuff to go through and get it all done. But, the idea is to make it where you could easily go in and, combine these trades together and, put together risk-reward trades and, basically build your own strategy. And make it simple, just like we can over here right now on the spreads. We can go in, and I can do both. I can make it straddle. And I could say, well, I want to, buy this, and I want to, sell this. And, let's see, that would even be one you could do. We could do, these strikes are all whacked out now because of that move. All right, so we got 30-20, 30-20. There we go. So there's a straddle right there on the $0 I could do right now. For pretty low, like $30. Now, it could expire soon, and, you don't expect normally a lot of movement to happen during this time of day. And so, it may not be the trade you want to do, but you do that right there. And, let's say you thought the S&P was going to drift on back down. You want to go ahead and you want to trade the S&P for a drift move. Let's check it out. Let's go in. Let's look at the sell side. And easily could get a 50% retracement move off of that. And so let's go in and pull up the S&P again. Right over here. There we go. All right. Like it may want to move back down. With easily, I'd say 0.7 could be a target level. So you could look at that and go, is there a good trade that's a low risk, not too far to break even? And there may not be. I mean, there's just a lot of implied volatility in here. The market's freaked out. But that's not too bad. So, and now it's all about where your stop is too. Okay. Now, one of the things that I teach, and it's so easy to get so into, your trade is your stop. You can't get stopped out. And I am so about that because I love that strategy. Okay. But you also could go in and you could just trade it like the underlying market, but have capped risk. So I could go in here, and let's say I sold this spread right here. Well, how much money are you going to put up if you trade an S&P E-mini? You're going to put up, probably at least five. Most brokers $500 at least. Some of them like $1,200 to trade an S&P E-mini, day trade it. Well, your max risk on here is 86 times 5. So, a little over $400. So you could look at that as margin. Doesn't have to be risk. But if the market does, now what does that equal? So $400, that's an 8-point move against you. Okay? Let's say you had this trade on, and this happened before you even got to hit the button to get out. You're still in, but it won't get worse than $400, $500. It won't get worse than that. No matter what happens, no matter what kind of flash crash happens, it's not going to get worse. And it's trading, pretty close to the market. 6 ticks. It's ticking in 0.1. Okay, so that's not too bad. So that's about a half a point away there. And so you go in, you place that trade, you go short, you put your stop right up here at the high, and, you could decide to go ahead and get out of the trade. Now, one thing I've looked at doing, so if we have that trade selected right there, is I've looked at actually going in and going, okay, well, what now if I wanted to hedge off my trade? Is there a cheap way to hedge off my trade? And so I can throw this on here and go, okay, well, that's sort of cool. It didn't really make a lot of money for me at the moment, but it actually does significantly reduce my risk, so I don't have to take on that full risk. This trade can lose money all the way to 1580. Here we go. Right there. So this trade can lose money, that I sold, could lose money all the way to 1580. This trade starts making money at 1575. So I can take 5 points, that's $250 of my max risk out of the trade. What does it cost me? Like a point. Okay, 6 times 5. So $30. That's, what is that? A couple ticks? So, and I've been able to, now I can reduce my risk by $250. So I could actually hedge a spread with a spread. So I can go, hey, I want this one right now, but I want this one just in case things do start moving against me. And, there's multiple spreads you could use. You could use this one right here. Your risk goes up. So, sorry, right there. It's a little bit more, it's $10, but it gives you 3 o'clock, so $50. So, but you could take that trade on right there, and it pretty much gives you the same hedge. Actually, it does give you the exact same hedge as the other one. It's just it expires an hour later for only a few more dollars. And so now I've really defaulted the short side, but I make money fast, and I have a hedge. And if it really does go against me, if it maxes out on that loss, this thing will start making money. So it could actually make more, basically it could cover all the risk on this. Let's just say the market flew up and ended, we'll just say it ends up here at 1585. Okay, obviously possible, all right? So let's just say the market did end up at 1585. I wouldn't lose anything on this trade. because I combine the two together. So basically, think of it like sort of like a straddle, but with a directional bias. So I am short, I will make more money going short faster. But if the market goes against me, I've limited my risk, and if it goes against me a lot, I can actually start making money or not lose anything, or maybe even make some money on the way back up. And so by using the scanner right here, you can use this P&L graph. So this is your loss, this is your profit, loss, profit. This is your P&L dollar amount over here, and then this is the price of the market. And so just like, basically any basic P&L graph. So as the market moves up, the short spread's losing, the long spread's winning. The short spread stops losing, the long spread keeps winning, making money. As it moves down, if the market moves down, the short spread makes money, the long spread stops losing money, and it continues to profit. So you don't even have to do the hedge strategy inside of a Nadex account. You can do it, like on futures and Nadex. You could actually do it just in Nadex if you wanted to. There's a lot of ways to do it. And the one advantage, the main advantage of trading with just the futures and forex is if you want to go in and you want to really scalp, but you want to have some protection. So you want to go and put that trade on, but you just want to go in and go over and over and over again entering trades. That's a big advantage. Another advantage would be you don't want to have a cap on profit. You have a 100-point move in gold that day, and the spread's only 50 points wide. So, of course, I don't think any of us would be upset about capturing the full 50-point move in a spread. Yeah, that'd be a good day, no matter how you want to look at it. But I want to get you thinking. You can trade a lot of different ways when you trade on the Nadex exchange, and you can do it in such a way that you cap your risk. So that way, you're not freaking out when things like this happen. And even if you, like I said, chose the at-the-money spread, and the market's flying against you, and you didn't get out, it's almost like just sit back for a moment, because it's not going to get worse, and it could come back, and boom, it does. It comes all the way back up. And let's look at a spread, like an at-the-market spread right now. I'm going to pull up one of the charts. Let's check this out. This will be a good example. If we go over here over to the indices, bull spreads, we'll pull up the S&P 500. We'll go into, let's see. Let's find a trade that you like realistically. Right around, let's say 1570. Let's say you're buying that breakout of the full expansion deviation. So, and we'll say you went in, let's see here, right here, 1570. Okay, so like right at that breakout, 1570. So you went in, you got in the trade, it was like about 1573. The market fell 10 points against you. You're only down a few bucks. Okay, you're down $3, 3 points, $150 if you did 5 contracts. Comes all the way back up. And you had time to be right. I don't know how many times I've said it. It's like, it's not just about being right, it's about having time to be right. And anything can happen in the markets. Somebody can hack an AP Twitter feed, which they shut down the Twitter feed. They can hack an AP Twitter feed, and stuff like that can happen. So, are you ready for this age, this technology, what's going on in the world today? Because revolutionary style of trading, you may want to check it out. We'll talk more about how you can learn more about it when we get back from this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour, and let me show you something over here. I want to show you one of the things I've been doing lately that's really helped out in my trading over on Nadex. And so, logged in, and so we come in here, and let's say I, buy this contract. I'm not buying it for real, okay? This is a demo. It's important that you know that. But, so we'll say I buy the contract. I need to change this, by the way, because I can do live or demo from the scanner. Here we go. And what it'll do is it's going to open an out-of-ticket window for me. Okay? Right there. It's an actual ticket from the Nadex platform. Opens it for me right there on my screen. And I can hit play. I want to make sure it's at the market price. So what I like to do is, if I know I'm going to get in, if it breaks this price, it's going to be, this is a limit order, which means at this price or better. So I'm going to go in and probably put it maybe 53.6. Okay? And why did I put it that high? Because it's at this price or better. And so if I put it above it, when it hits it, then when I hit my order, it's going to feel me. It's going to be like a stop order. Okay? So stop market. Get me in the trade. If I do a limit order and I put it in and the market moves, then all of a sudden I have a working order and I'm chasing it. I don't want to chase my working orders. Okay? I want to get in the market. When that ticks it, I want to get in. So right there, boom, ready to go, filled in. See, if I would have waited, okay, on that trade, I would have had a working order right now. I would not be in the trade at the moment because I would have had it done at 1573.2. I'd have been trying to adjust it, everything else. So by doing that, instantly got me in the trade. And so as you can see over here, you have the working orders in, and then you can flip it. Okay, so now what you want to do is you want to flip that contract around, and you just click on this price right here. And instantly, that'll allow you to flip your contract in the other direction, so that way, you can place the trades, wherever you want to do it. And the big thing I like is, again, now I can trail my stop up. So I can go in here, and again, you can do this on demo or live, and I'm just sort of, play trading at the moment. So, but right here, 1572.5, and let's say wherever my stop loss is, whatever method you use, it can vary, however you like to trade. But let's say my stop loss is at 1570.5. Then I can come down here and put it at 1569. Okay? And then if it hits that price, okay, on the market, so if the market actually hits that price on my trade, I could hit the button and it'd get me out. Now I got filled on this trade at 1572.4. Okay, so I'm going to hop out of this trade because I'm not really doing it at the moment. But notice where I have it quoting at 1569, and it's at 1572.4. Now I need to switch to sell because I bought, right? So change my direction using the exact same ticket. Okay? And now I'm going to hit place order. And, because it's a little bit too low. Let's bring it up a little bit. There we go, 1570. That's an important rule. Can't be below the floor, which is good. Anyway, so I'm going to hit that order, and it's going to instantly fill me at 15. Still wants it one tick higher than the floor. There you go. Okay, being picky. There you go, 1570.4. Boom. Instantly in, done, filled, out of the trade. So, you can do that again. In here, what you would do, okay, is go in here and select live or demo. And then, so I'm going to repeat the steps for you. So I'm going to click buy on this contract. And, if it breaks this high or whatever, I want to get in. So let's just say I have my market at 1574 right there, place order. And then once received, filled, flip it around and change it to a sell order and make that, below where I want to get out at. So maybe like 1569. Now in this case, we can't do it because as we saw, then I hit place order and boom, out of my trade. So much easier than trying to deal with all the working orders. All right, make sure you check out our website. We got a massive event coming up in Boston for Nadex. Learn more. Check it out.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.